For seniors over 65, the bill introduces a temporary deduction starting in 2025 and ending in 2028. If you make $75,000 or less as an individual or $150,000 or less as a married couple, you can deduct up to $6,000 from your taxable income. But the deduction begins phasing out once you cross those thresholds, and it disappears entirely at $175,000 for individuals or $250,000 for couples. Seniors will still qualify for the existing senior standard deduction, but this new benefit is limited both in scope and in duration. Now let's talk about working class folks. From 2025 through 2028, the bill allows tipped workers to deduct up to $25,000 in tips from their federal taxable income. And if you work overtime, you can deduct up to $12,500 if you file as an individual, or up to $25,000 as a married couple. But again, these only apply to federal income taxes, not payroll or state taxes, and they're just temporary. The deduction starts to phase out for incomes over $150,000. But here's where the bill really raises alarms. Starting December 31st, 2026, Medicaid will require most adult recipients to work, attend school, or volunteer at least 80 hours a month to stay covered. There are exceptions for caretakers or children under 14, but that's a narrow window. Then, starting in 2028, Medicaid expansion states will be required to charge enrollees up to $35 for some medical visits if they make between 100% and 138% of the federal poverty level. And behind the scenes, the bill also reduces how states can leverage tax funds to draw down federal Medicaid dollars, something that could slash funding for rural hospitals and safety net clinics. SNAP, the Supplemental Nutrition Assistance Program, also takes a hit. The same 80-hour monthly work requirement will now apply to all able-bodied adults under 65 unless they're caring for children under 14. Right now, that threshold is 55 and the caregiver age cutoff is 18. Starting in fiscal year 2028, states will have to help fund a portion of SNAP benefits. That shift could force states to tighten eligibility or reduce benefits, especially in areas already struggling with food insecurity. Finally, let's be honest about what's driving this. While this bill provides short-term tax cuts for some, it also adds more than $1 trillion to the national debt. That's not just theoretical. It puts pressure on future lawmakers to raise taxes or cut spending elsewhere, likely from the very programs that working class people, seniors, and students rely upon. So yeah, you may see some savings in the next couple of years if you're wealthy, but they come at the cost of long-term stability and social equity. And when support systems are eroded in the name of tax relief, it's the most vulnerable communities who end up paying the price.